Greetings, members one and all of the Salivation Nation. Donald in New Mexico sent me this interesting piece from Bloomberg, and I think it's quite fascinating and interesting to see from a major, a mainstream news source, a little positive news about gold, precious metals indeed. And says that not all gold bugs wear tinfoil hats. Well, thank you for that. The precious metal is the closest thing that we have these days to an objective store of value. I concur. Let's explore this article. So this is by Jared Dillion, and this is from Bloomberg Opinion. It says that gold has some reputational issues since reaching a record high in 2011. The thesis at the time was that a massive expansion of the money supply via the Federal Reserve's quantitative easing program would spark hyperinflation, making hard assets more attractive than financial assets. Hyperinflation never came to pass, which helps explain why the price of gold tumbled almost 50% over the following 4 years. We still don't have very much inflation, and yet there is a renewed interest in gold, with prices reaching their highest since early 2013 at about $1,440 an ounce. Actually, it's a little less than that now. There's a lot of reasons to like gold, but before we continue, I will say that by some metrics and by some measures, the rate of inflation actually has increased, and the dollar has lost about 11% of its value since 2016. So just depends on which measures you take, but there is inflation still going on. Make no mistake. In fact, the Federal Reserve, targets about a 2% inflation rate each year. So even by the most conservative measures, the dollar loses its value every single year on target. They know it's happening. And as to some of the reasons why we haven't seen the hyperinflation that many of us thought was going to happen since the 3 rounds of quantitative easing, probably has to do with that we are still relying on the effects of the pumping of the money supply, of what we known as helicopter Ben, and all of this and the stimulus that has occurred, but also because a lot of that money went overseas and has not been repatriated back. Remember, the dollar is essentially the strongest of the world currencies, and it is, everybody relies on it and uses the dollar. So I think that's part of the reason why, but sooner or later it's going to come back and bite us. As to when that happens, who knows? The highs of the 2009 to 2011 roughly corresponded with the large deficits that reached 10% of GDP during the Obama administration. And this is after he's talking about how gold tracks fairly closely with budget deficits. The highs, which included the stimulus spending during the Great Recession and a sharp depreciation of the value of the dollar. This time, there's a sense that the deficit problem is large and intractable. The Congressional Budget Office forecasts the deficit will more than double to 8.7% of GDP by 2049. Also, there's an open discussion of things such as modern monetary theory, or MMT, which would be about the most gold bullish development imaginable. You think about it, no one in Washington, D.C., or really of most governments out there, first world nations, are talking about spending cuts or austerity measures. Nobody on either side, from the president on down to most everybody, except for maybe perhaps the Freedom Caucus, which is a small handful of congressional Republicans that are actually talking about fiscal responsibility and spending measures. Gold is the closest thing we have to an objective store of value. Many disagree, saying there's nothing objective to gold's value since it generates no cash flows. But that's not the point. The point is that there is a finite amount of gold in the Earth's crust, until you can mine it off of an asteroid that they say is full of gold and will make everybody a millionaire. But I think we pretty much talked about that when, in a prior video, and if there is any truth to it all, it's going to be quite a long time before it actually gets here. So we shall see how that plays out. And that even talks about that. In fact, the author says that he has positions that would profit from a rally in gold and the shares of gold mining companies. The cryptocurrency promoters argue that Bitcoin is an objective store of value, and they're somewhat right, since there can only be a certain number of coins in existence. However, I will say that the author here says that Bitcoin has technical complications that gold does not, such as what happens if the power goes out. He's argued for years that tangible things you can pick up and touch are considerably more valued than lines of computer code. Time will tell. Not only that, but since there's 21 million Bitcoins that can ever be mined, well, what about the forking that's been going on and the fact that Bitcoin is the MySpace of the cryptosphere right now? What will be the Facebook and what will be the Snapchat? Facebook is one of these social media. If you make a social media comparison, Facebook is really kind of becoming out of phase right now, but there's literally billions and billions of users. There's more accounts tied with Facebook than there are of many populations of many nations around the world. So it's going to be quite interesting to see how that plays out. And because it's digital and it's lines of code, things can change very quickly in that sphere. Whereas gold is tangible, it is what it is. It can't be reproduced and can't be manufactured out of thin air. The biggest factor affecting gold prices recently has been the proliferation of negative yielding debt. There are about $13 trillion of negative yielding bonds in the world. And a shiny rock that yields nothing but admittedly has some storage cost is actually a high yielding in comparison. Those who advocate the investment merits of gold are often labeled as gold bugs, which has become somewhat derisive phrase associated with conspiracy theories and tinfoil hats. But in the current political and economic environment, there are real intellectual reasons to think about gold other than hysteria over hyperinflation due to money printing. The hysteria over inflation due to money supply growth was pretty widely accepted in 2009, and including by the author, but it was the fear of inflation that drove people into gold, which worked out and put options on 30-year bonds, which didn't. In other words, gold can move on fear, and it certainly does. I've talked about that many times on this channel. It can move on fear of deficits, and it can move on fear of MMT. Even if those fears are never realized, markets are occasionally irrational. The psychology of the markets and the price of gold and silver. But that doesn't mean there aren't opportunities to profit from the irrationality. Every bubble has two phases. There's a first move, which is backed by lots of speculative froth and retail participation, and the second move, which is the real move and may not happen until years later. It happened with tech first in 1999, which eventually evolved into the FANG group of stocks: Facebook, Apple, Amazon, Netflix, and Google. It seems to be happening in Bitcoin, as the most recent thrust higher is mostly happening without retail participation. And it is happening in gold, where the dearth of retail coin sales suggests the surge higher is more about institutional and central bank demand. Well, that's interesting, because central bank demand, I think, plays a huge part in it. I mean, China and Russia are accumulating gold at record paces. People tend to invest in what they have an affinity for and what they agree with. Environmentalists and animal rights folks invested in Beyond Meat. Cannabis enthusiasts invested in cannabis stocks. Conservatives like gold. We should all like to invest in things that go up no matter what they are. But I think gold is beyond a political persuasion or an ideology. From my experience on this channel, people of all stripes like gold, of all backgrounds, of all religions, races, and creeds. That's been one of the eye-opening things that I have experienced in this channel. Now, admittedly, probably the vast majority of folks probably do fall in line with a certain ideology, but it doesn't have to be that way. Gold, by the way, you talk about the FANG group, Facebook, Apple, Amazon, Netflix, and Google, and other things, Bitcoin, and other particular situations. Gold is very unique that the author doesn't touch on, and that it has literally thousands and thousands of years of history behind it that has been treasured and stored. And I don't think any tangible or intangible asset can replace that. So I think it's quite interesting and fascinating. But I do think the overall sentiment of the article, I think, is true. It's not just for tinfoil hats. For those who enjoy gold and who see it as not an investment, but as a store of value. It is something that is the ultimate store of value, even above silver, I believe, at this point, though I do believe silver is a store of value. It's a bit more volatile. And even at its point of being stagnant right now, there's times where it falls below, but it has started to eke its way out of that trench, I believe, below that level of inflation. We'll see where it goes. But gold, in general, I highly encourage it. I think it's a wise move as a diversification tool. And by the way, there are people who hold gold and diversify into other investments. That's right. Because gold is a protection against the instability of the investments that you may partake in. And as the article touched on and the author mentioned, we have deficits, we have debt, and we still have not really seen the effects of quantitative easing that some have expected. And I think we will. The next economic downturn, by the way, may or may not be the time of revelation of the effects of quantitative easing. We'll see how it all plays out. Post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, share, comment, and subscribe.